This is Japanese Economic Review Channel. Today's statistics reveal a significant turning point for the Tokyo market. The Nikkei 225 plummeted by 2,565 points, closing at 69,788. This marks the first major drop in 9 days, and the first time the index has broken below the critical 70,000 threshold in a week. After a prolonged period of bullish momentum, we are seeing a sharp correction triggered by global shifts. The dashboard highlights a stark divergence. While the Nikkei and Topix saw heavy losses, the US markets showed a split. The Dow Jones rose by 148 points, but the Nasdaq fell by 351. Interestingly, despite this equity volatility, the currency market remained relatively stable, with USD/JPY holding around 161.32. This suggests that the current turbulence is driven by equity-specific valuation adjustments rather than currency-led flight. What caused this? Statistics show a geopolitical shift as the catalyst. Progress in US-Iran talks regarding IAEA inspections led to a drop in oil futures and a retreat in inflationary fears. Paradoxically, this good news triggered a massive capital rotation. Investors moved out of high-tech stocks like ARM and Alphabet and into cyclical stocks, dragging the Nasdaq down and setting a negative tone for Japanese tech. The market breadth data is telling. In the prime market, 1,154 stocks declined, over 70% of the market, while only 366 advanced. Although we saw some resilience in morning dip buying, a contagion effect from weakening Asian markets, such as Taiwan's TAIEX and South Korea's KOSPI, intensified selling pressure in the afternoon. Total trading value reached a massive 13.73 trillion yen. Looking at the 33 industry sectors, 28 were down and only 5 were up. The sell-off zone was dominated by electric equipment and infocom, with heavyweights like Tokyo Electron and SoftBank Group facing pressure. Conversely, the safe haven zone saw gains in fishery and land transport, such as Nishui and JR East. This confirms a decisive move by investors towards stable, defensive yields amid tech uncertainty. The correction extended to the growth market 250 index. We observed a direct sectoral repricing in Japanese space-related stocks like Astroscale and QPS Holdings, following a sharp valuation drop in US-based SpaceX. However, there were anomalies. While recent IPO suffered a massive drop, the newcomer LinkEX hit its stop-high limit, showing that specific corporate stories can still defy broader statistical trends. To conclude, today's closing snapshot reflects a market in transition. Beyond the indices, we see corporate strategic moves continuing, such as Dai Nippon Printing's Space Venture Partnership and Daido Trust's reconstruction efforts in Noto. While the Nikkei 225 has retreated from its highs, the shift toward defensive sectors and ESG-focused investments, like Yasuda Warehouse's solar initiatives, will be key areas to monitor in the coming days. Thank you for watching the Japanese Economic Review. We look forward to having you with us again.